Gold prices, which are surging. Gold rose more than 13% in the first quarter of 2024. The recent rally in gold prices has also been supported by geopolitical tensions and coincides with record high equity index levels. In volatile times like these, should one buy, hold or sell gold? Let's talk about that. Joining us is Harshal Barot. He's a senior consultant, South Asia and Middle East, metals focus. Harshal, thank you very much for taking time out. I think let's start with the basic question. Should you buy, hold or sell?
I think the honest advice at this point in time would be to just not do anything at the moment, because yes, there is a lot of uncertainty at the moment given the geopolitical situation. But from a macroeconomic backdrop perspective, we've seen the possibility of US rate cuts go down further. We started with expectations of 6 rate cuts in 2024, and now the market is down to expecting less than 2 rate cuts. So there is definitely a very high possibility that we might see just 1 rate cut this year or no rate cut at all this year, given the situation with inflation. We've seen the run up in oil prices, we've seen the run up in the broader commodity prices as well. So there is definitely that risk, which is a downside to gold. But given the geopolitical backdrop, gold prices have not reacted to these macroeconomic fundamentals. So I would say there is definitely a scope for some sanity to return in these markets once markets start focusing on fundamentals a little bit. So there is scope for prices to fall towards 2,100 to 2,000 dollars levels. But from a slightly medium to longer term perspective, these will be very good levels where investors and consumers will jump back into the market to buy gold.
Okay, and what about silver, Harshal? Because an interview that Jim Rogers gave to Business Standard yesterday suggests that while gold may be touching all-time high, silver is pretty much trading in the lower bracket. So, would you compare gold and silver and say that maybe use silver as a hedge and ignore gold for a while?
So I think to an extent that trade has already played out. We've seen the gold-silver ratio, which touched almost 90 at one point in January, is now back close to 80 odd levels. So I think that kind of bargain hunting has already happened in silver, and for sure, silver fundamentals are far more positive than what golds are at the moment. But again, as I said, given the geopolitical environment, gold is finding a lot of support from that factors. Plus, there is an element of central bank buying gold, which provides a floor to the prices. For silver, that unfortunately is not the case, so it tends to be far more volatile as well. So we definitely see silver as a more fundamentally strong play over a medium to longer term compared to gold. But I think in the short term, it is far more vulnerable to a correction than gold is.
All right. Yes, Krishna.
The one question I would like to ask at this stage is that how does one go about planning your gold purchases from here on? I mean, you're talking about gold at an all-time high, and then of course in the times that we live in, we have multiple options of investing in gold. There is paper gold, there is physical gold, there are other ways of doing it. There's sovereign gold bonds. How does one? And they always say, gold should be a fundamental part of everybody's portfolio. Around 10 to 15% is what is the ideal that's told to your average retail investor. How does one go about planning that gold portion of your portfolio?
So I think purely from a financial standpoint, sovereign gold bonds make the most sense. Because they also offer you a yield. But then again, it depends on your horizon. If you're looking to, buy gold for a short to medium term investment, they don't provide the best liquidity, so you may not be able to exit very quickly from those bonds. So then your option is either ETFs, if you just want to do financial investments, and the more traditional method, which is, physical bar and coin purchase. But of course, a lot of the high net worth individuals don't prefer to hold physical quantities of gold in a large quantity, at least in the Indian scenario. Globally, yes, people tend to, be HNI investors, they tend to store their physical gold in vaults and, private agencies which store their gold. But in India, that is not a scene that we've seen emerge, very substantially in India so far. There is digital gold holdings as well, but those products have not become popular because there is an element of GST that you lose when you buy and sell through those digital platforms. So I would say, between ETFs and physical, depending on what your need is, I think would should be the investor's choice.
All right, Harshal, going back to your first statement around not doing anything and waiting and watching, we've seen a trajectory of gold prices over the course of last 48 hours, which perhaps does not make much of a sense. We've seen gold go down despite geopolitical tensions abroad, then we've seen gold going up again this morning. What's actually happening here for an average person to really understand how gold prices are moving vis-a-vis what's happening in Iran, what's happening with Israel? How does one really make out the trajectory?
So I think if I try to become a geopolitical analyst, I think if I just look at the oil price and the gold price, they suggest that they are not rising in a big escalation in the conflict. So that's definitely there. But in an event where an actual conflict breaks out, historically we've seen that whenever there is this big risk off moment that occurs in financial markets, gold also tends to see a sell-off initially because there are margin calls and people tend to run to cash first. So initially gold could also be vulnerable to a sell-off in case there is a big escalation. And then as the dust settles, people then try start buying gold again. So this has happened during 9/11 and a lot of other global financial crisis during 2009 and 11 as well. So for now, I think the gold price is telling us that big escalation is not on the cards.
Okay.
Okay, Harshal, one last question from me. Again, like Shweta's case, I'm also linking it to the first response you gave us. You said right now do nothing. When you want to do something with gold, is the buy on dip strategy, like many financial, stock market experts say, is that something that one should explore? If yes, what is that dip level? And for those who are already invested in gold, if they want to cash out, what would be the peak at which they should look at selling?
So I think, as I mentioned earlier, buy on dips definitely, because medium to longer term we definitely see gold prices on a higher trajectory. So any dip towards 2100 to 2000 levels is a good buying opportunity. So I think anybody who wants to invest in gold even at these prices should definitely use that buy on dips approach. And for someone who's looking to cash out, I think anywhere between the current levels to any levels close to 2500, I think I'm not allowed to give explicit buy and sell advice, but if an investor is looking to just cash out, I think 2500 is a good psychological level of the market.
All right, 2500 time to cash out, 2100 time to buy. Perhaps that's the word coming in. Harshal, thank you very much for taking time out. Thank you for joining us here on Newsline this evening.
Thank you.